The S&P is in a pullback phase until Friday or Monday next week. We are now on September 30th. This pullback phase, it's important to realize that this is still a pullback in a larger uptrend. We're still expecting much higher prices. The market did come down earlier than expected. Last week we expected a high at the end of the week, and it came in on Tuesday. Our emphasis, and you should know this, is on the intermediate and the long-term trends. So if you're a day trader, be alert to that, okay? There can be plus or minus a couple of days on any of those dates. However, many of our students are day traders, and we have a Discord channel which is separated into a day trading group and a swing trading group. And they're oftentimes very successful using techniques that they share, and including some of the techniques that we teach them to give them a handle on the shorter term trends. Making one video a week, it's difficult to be precise, but if you update it every day or every other day, it turns out to be much more accurate. By the way, you can still join the Market Forecast Mastery course that started last week. It looks like what started on September 2nd and ended on September 22nd is basically a one wave of a big fifth wave that's in progress. And the two wave of the fifth wave is now the correction that started on the 22nd. And earlier we said it would start on the 25th and go till October 6th. And now we're saying it's in progress. It started earlier than expected, but it's likely to end in the next few days, possibly as late as Monday. And also, because it is an ABC format, there's still a chance that it'll take out the lows that it had at 26.11 on the futures, on the December futures. So there's still a couple of days where we could see a decent sized decline, but not huge. We're still talking less than 2%, okay? All right, the whole thing comes down to the market is still likely in an uptrend. A strong uptrend still could easily take place after the 6th of October until the late part of October. We have several cycles that we've been looking at. We mentioned the 17-month cycle, and that goes up past November, actually. We mentioned the 13-month cycle, and that's up. The 8-month cycle, and that's up. And we're also looking at the 4 cycles of 260 trading days and 6 cycles of 260 trading days. We've talked about each of these, and they all go up until late October. We're still looking for much higher prices. We're looking potentially for 7,600 in this before year end. And it's possible that the high will come in after October 28th, although we're not confident that that's the case. It depends how high it gets by then. If the market doesn't get that high by then it could go higher later. It even could go higher until next year, until like March of next year, okay? But we're not bearish yet. After the high comes in, whether it be October of this year or November of this year or March of next year, we're looking for a bear market in 2026. The market seems to be tracking for some reason, and we know it's an astrological reason, that the market seems to be tracking the 60-year cycle extremely well, which basically is in a sideways phase right before the last leg up. We've shown this in repeated videos, the 60-year cycle, and double it. They agree very well on what's likely to happen going forward because they've been agreeing with the present market extremely well for 5 years now. And they agree with each other going forward, with a good probability that that will actually take place. 2026 would be a bearish move, and then up again into 2028 or 2029.